Hi guys, this is Mark Shaws and the Pattern Trader. Over the weekend, a young 19-year-old women tennis player prevailed and won the US Open over the reigning champion Serena Williams. Now, other than being an unabashed tennis fanatic, I'm talking about this for a couple of reasons. Even though she's only 19 years old, it was revealed by the broadcasters that when she was 15, Bianca Andreescu, the 19-year-old phenom, was already visualizing winning the US Open. She actually, at the time, wrote a check to herself as the winner of the US Open. And then every day in her meditations, in her thoughts, in her visualization process, she was, looking at herself as holding the trophy, as being ultimately the winner, even when she was 15 years old. And by 19, against all the odds, she made this happen. So I think visualization is a very important process in just about everything we do, but certainly as traders. So I think, most traders think, well, if I just had the best setup today in the euro, or if I knew when to go short the dollar yen, or, if I just got out of that trade, yesterday, it would have been, a different result. But I think what I would suggest is, try and picture where you want to be 6 months from now, 12 months from now, even 18 months. Put an objective out there that's realistic, and then you have a certain metric to work toward. So every day when you're doing something, you can ask yourself, did I do the right things in order to accomplish my ultimate objective? Did I stay in that trade long enough, or did I jump to take profit because I was emotional or something of that nature, where I was just thinking about the dollars in an immediate time frame? If you try and put it in perspective, where you have a 12 and 18-month horizon to achieve something, I think that would help you greatly. Now, the other reason I raise the victory by this young Canadian is that in a race to the bottom between all the central bankers in recent weeks to crash interest rates to zero, and in many countries like France, Germany, and Japan, we're now seeing negative zero. Countries are trying their best not to have the strongest currency. So everybody is seeing an increasingly stagnating economy on the world stage. And so nobody wants to have the strong currency to discourage exports. And so all these central bankers are trying to weaken their currencies simultaneously. And so the question remains, well, which currency is going to emerge as, on a relative basis, the strongest currency? And I think increasingly that is becoming clear, and that is the Canadian dollar. So when we look at the Canadian dollar versus the euro, versus the New Zealand dollar, versus the Australian dollar, even the US dollar, it looks like it is increasing in strength. And based on the long-term patterns, which I'm going to show you in my analysis in just a moment, the Canadian dollar looks like it's going to be going much stronger over the next weeks, months, and possibly years to come. So that is the reigning champion in the currency market right now, the Canadian dollar. So now I'm going to go to the charts and show you exactly what I'm looking at. And in this chart, I'm looking at the monthly chart of the US dollar versus the Canadian dollar. And to my mind, based on a cross-section of currency pairs, it looks like the Canadian dollar is the strongest currency on the board right now. The yen and the Canadian dollar, but especially the Canadian dollar. So as central bankers rush to lower interest rates around the world, no country wants to be left with the stronger currency. It's kind of a race to the bottom, and we're trying to determine which is going to be the strongest currency. And to my mind, undoubtedly, that is going to be the Canadian dollar. In this particular analysis, I'm looking at the dollar versus Canadian dollar on a monthly, and you can see that we've been forming this long-term symmetrical triangle. And any breach below this support line around the 130, 129 area, I do believe will open up a significant path lower in dollar Canadian. Now, I can already anticipate some of you are saying, well, Mark, isn't this a huge double bottom? It crossed the neckline, did everything what a double bottom should do. And yes, I would say ordinarily you would be right. But this is the principle I try and advance in my webinars and on these videos, is that we can't just look at textbook chart patterns. I remember when I first started, I would see patterns like this. I'd see it in the chart analysis, some website or some book, and say, okay, this is what it is. But then I have learned to defer to the market and let the market be the ultimate arbiter. So sometimes we do get these patterns, and then we have to determine, is this pattern valid or not? And the only real judge of that is the market itself. So if this was a double bottom, we should have seen a retest, and then we should have seen price action that would have been consistent with a double bottom. That suggested a bottoming in the action and a market that then over time goes higher. But what we've seen since the breakout is lower highs. So every time this thing tries to go higher, it's just going, it's losing altitude and coming down with lower highs. So this is not consistent with what we should see in a double bottom price pattern. So this failure, to my mind, is somewhat of a bull trap, where we get perched above a certain breakout area, and then this looks like it will trap anybody who's ultimately bought in this area, as this thing looks like it's headed lower. Now, to support my analysis that the Canadian is the strongest currency on the board, I'm going to look at a series of price charts which, to my mind, have set in stone certain price patterns which forecast the next direction in these pairs. So in this case, I'm looking at the euro. So if the Canadian is the strong currency, then the euro versus the Canadian should go lower. And that's obviously what we're seeing. And then when we look at it in context with the major price patterns, you can see that there was effectively a double top here, even a double top in the near time frame. And then we have this descending pattern, which looks a lot like the dollar-yen descending pattern, where you see a downtrend line that connects all the highs and a horizontal line that connects the lows. We kind of got a breakout recently. We broke back into the pattern, and now a failure, which should now really get going to the downside in euro versus Canadian. So to my mind, the risk in this pair is not being short. The risk is not being short dollar Canadian now. I'm sorry, euro Canadian. So we could very easily get a peek back to this breakout area, but I would think that any move higher, to my mind, would be a fantastic opportunity to get short euro Canadian. Now, we do see that we are right at or near some support at the 144. We could get a descent and some kind of bounce here, but to my mind, any bounce should be shorted in the euro versus Canadian, as the long-term trajectory seems almost undoubtedly lower. In this chart, I'm looking at the Australian dollar versus the Canadian dollar. This is a weekly chart, long-term weekly chart, and going all the way back to the 2011 to 2013 time frame. This double top indicated where this pair was likely to reverse, and then after that we formed a long-term rounding top, and we've recently cracked below the neckline of this entire top formation, and ultimately setting in stone that this thing will go lower. So we could certainly retest this breakout area, but I don't think that this has a lot of room to go on the upside. Any break to the upside, I would look at that as a shorting opportunity, and ultimately this looks like it has a lot of room to explore on the downside. As with the Australian versus Canadian dollar, when we look at the New Zealand dollar versus Canadian dollar on a weekly chart, we can see the very prominent Adam and Eve double top, and Adam comprises of a single spike, and Eve is multiple spikes at the same area, but nonetheless we have a double top price pattern. This is a reversal price pattern that indicates that the market leading up to that was an uptrend, and after we hit a reversal pattern, obviously it's going to reverse in the opposite direction, and effectively that's what we've seen over a period of time, and I expect this to continue. In addition to the double top, we see multiple areas that comprise what is a complex head and shoulders. So there are multiple spikes at each shoulder level, but either way, the double top head and shoulders neckline is right about where we're currently trading, and any penetration below this neckline, to my mind, should open up a huge move lower in New Zealand dollar Canadian. So ironically, the young lady who beat Serena Williams yesterday was Canadian. It's the first time a Canadian has won a major singles title, and so it looks like the Canadians and their currency look like they're going to reign supreme for some time. So I do believe that being long the Canadian dollar, being short these Canadian correlated pairs over time will yield a lot of profit for those who take a patient and disciplined approach. I hope you got a ton of value out of this kind of analysis, and hope that you can see a way to improve dramatically your own results. Now, this week and this week only, I'm selling a book on my own personal trading journey and how I learned to identify and capitalize on monster moves in the market. And this week only, this book is available for the grand price of pay anything that you want. So however valuable you see this information, you can determine that. Obviously, karma is such that I think the more you place value on something, the more value you're inclined to get. But that's entirely up to you. So if you want to download my personal trading journey book and pay anything you want, then just click the link attached to this video. And I hope you have a healthy and prosperous trading day.